All right, folks, got a quick day here. Wanted to record some price action of stuff that's going on right now. And I've got a couple of things here. Got one live trade going on that's already in. And then I've got another one hopefully waiting here to return back to. It's returned twice to that level and hasn't filled me, which has been very aggravating here. I want to be filled right there, right at that volume. There's a volume imbalance on the 15-second here. There's a volume imbalance right there that I wanted to be filled at, but it doesn't look like it's letting me being filled at that level. So I'm hoping that it hits there. Stop loss is above here. Example of a trade getting in at this fair value gap with the idea that we are heading down to none other than the new week opening gap. This is our new week opening gap. We've had a week where we are essentially just a little above the new week opening gap. We've had a daily which has broken above but not quite above this new week opening gap high. So I anticipate that we'll end up heading back down first. So yeah, buy stops, sell stops have to be above that short-term high up there. Technically, if I were to place my stop correctly, I would put it above the short-term high. That's this one up here, technically. So we'll see. If it gets stopped out, it gets stopped out though. Another thing that I'm looking at is this swing low to this swing high. I'm watching this closely because this would be 50%, 60% retracement. So 18,376 would be what we'd be looking for a profit target here. Okay. I'd be okay with the reach down to 13,385. That'd be fine by me. But as you can kind of see here, volume imbalance here, as well as the outstanding sell side imbalance. We're going to return back into this area, bearish order block here. I don't want it to trade any higher than this, right there. But I do see this as displacement lower, so I'm expecting prices to continue lower. We can kind of see these areas here. Wait, why is that indicator on? Oh, it's because I have that on 15. That was yesterday's high. You can kind of see that. Close. I don't know why that high is screwing up like that, but okay, so what we want to see is we want to see the midpoint of this whole area be respected. There's this mitigation block that we dropped out from. There's this mitigation block we could head up to before dropping out. And if it stops us out, that is okay. That is within our risk parameters. Okay. First target here, 18,382. I think I'll close out most everything at 18,380, a little bit above 18,382. So I'd like to close these out before then. Okay. On the 15 minutes, we kind of see how we've seen displacement lower. We've seen a return back to that original consolidation here. return back to that high, low, higher high, displacement lower, bearish breaker. So this in itself here, this is a bearish breaker. Okay. That in itself is a bearish breaker right there. We return back up to it, traded lower, first stage of distribution, first area of distribution I think is here. Can't see it as easily on this chart, but you can kind of see it on the 5-minute chart a little bit. First stage of, or there's the second stage of accumulation here. We reach that level, we're accumulating here a little bit, so we can go up and down for a little bit in this area here. I'm actually going to, if this breaks above here one more time, actually if it goes up to here, I'll take one more contract if it breaks this high here. So market maker sell model here, right? Now this could go all the way down back to new week opening gap low. This could be the original consolidation here because we kind of see this being a balanced price range. We have movement higher, return back to fair value gap at New York Open, and then first stage accumulation. Sorry, this is first stage accumulation, second stage accumulation, third stage, and terminus. So I am hoping that we end up returning back to new week opening gap as our draw, kind of like as a magnet. I'm looking to see if we achieve that. Now, I do like that we have this bearish order block here. So let me see if I can zoom in on that a bit. So what you want to consider is this entire area here. Once we break below it like this, you want to map out that 50% mark, right? This entire thing is going to be considered as a order block now. So we got our one extra order in, and our stops are in between there. This entire area is something that I'm looking to see if we don't go and close above that midpoint there. I don't want to see a close below that midpoint. Technically, I should be collapsing the trade if it does do that. So far, it's coming into that sell side imbalance quite nicely. Very nicely there. So 1, 2, and then a third. 1, 2, 3 drives pattern. And what we want to see now is we want to see it break back down. Let's see if I can move this out to like 11 a.m. or something like that. Just give us a little more room here. Nope, that didn't work. That's not what I wanted to do. All right, so that bearish order block, I'm going to remove this because it's a little harder to see. It's this one that I wanted to move over a little bit. We see that gap there. Technically, what does that look like on the 1 minute chart? It looks like there's this gap here on the 1 minute chart. If you can see that, can't see that super clearly, but that's what we don't want to see. We don't want to see a push up there. We want to see this respect the consequent encroachment. So this is kind of like the midpoint of that sell side imbalance, right? We want to see that continue to respect this that midpoint there. Right? So we are expecting that continuation from a higher time frame perspective. We're expecting that we see a respect of this high here of I don't know, 18,429 potentially. So I'm actually gonna raise my stops to above that 429 because I think it could head up there. Potentially it could head all the way up to this bearish order block's high of 433. So if I really wanted to be safe, I move my stops up to 18,433. And I monitor what happens within this area here, right? I monitor, I look to see if it tries to go for these relative equal highs as a stop run, right? I like to see this displacement respected here. I like to see this second stage distribution is what I'm looking for to the downside. And if you can see, I have the whole range there, right? So this whole range from this swing low to this swing high, I have that baked out. And then also from the candles to candles, this is hard to see here. Let's put that over here maybe. Candle to candle. We can see that there's a little bit more for it to go to hit the 50% mark. I'm banking on this continuing lower. But if it does end up coming here and disrespecting the midpoint of that bearish breaker, that bearish order block there, then I'm gonna have to reconsider, right? So PD arrays that we're looking at. Let's see the midpoints. There's one more midpoint that I want to make sure I mark out, and it's right up here, the midpoint of that bearish order block. That is the last stand. If it breaks and closes above that candle, I don't want to be in there. That's one PD array. One PD array being the volume imbalance here. The second PD array being this overall sell side CPI on the 1 minute, right? So that's a CPI on the 1 minute. And then, of course, the bearish order block on the 15-second. I don't want to be in this if it does not see immediate response from there. I'll collapse the trades. So now we need to see it reject here, otherwise it's going to end up reversing upwards. Okay, that was a good reaction. We'd like to see that. We don't like to see that. So it looks like it's slowly creeping up there and into the bearish order block there. Okay, so it's traded up into that bearish order block now. And has now reached the entirety of the sell side imbalance. So if we see price begin to move up higher and close above this area, then we're in trouble, right? And we need to collapse the trade at that time. So these would be the three, and we would have collapsed anyways if we were following the roughly 12.5 handle rule, right? So if it does head higher, then it's going to start to make its way higher. If we don't have any support here for continuation lower. Watching it really closely here, because this did look like a market maker sell model here, so I'm still convinced that it's gonna give us what we need. But all right, so we need to see big displacement now. We need to see large displacement to the downside. That was a good, very nice displacement down there. We wanted to see something like that. We broke below a 15-second short-term low. So all good things that we want to see. Now we would need to see it follow through here, right? Because it's been creeping up lately. So, all right, so we see on a 15-second, we see a small displacement come back up into this sell side imbalance here. Very small sell side imbalance here. So we'll see now that we have, for sure, if we see a return back up to here, we need to close this out now because it's going to be heading back upwards. But I think we can extend this CPI out a bit on the 1 minute. And we want to see it begin to close beneath that midpoint there. All right. So that's good. That's a kind of movement we wanted to see. 15-minute there, hourly here. Let's see a little bit more. Okay, so we want to see it remain below the midpoint of this here. We see there's that CPI. Now there's this. I'd like to see that stay open. That one right there, I'd like to see that stay open if possible. It doesn't look like it. If we don't see it stay open, I'd like to see it just barely break into that and then immediately have some institutional order flow support it to the downside. 6:23 in the morning, so it could happen. Well, anything here could happen. But for the time being, we'd like to see if it can support breaking below this 1 minute. 1 minute sell side imbalance, which we're in right now. Okay. And we want to see it go lower. That's framing out a trade where we have seen a market maker buy model finish, and then we're now beginning in the beginning echelons of a market maker sell model. So what can you target? First target, technically, is here. It's this line. This is your first target. This is where you want to take one off, technically. Now, I think that we'll have some more there, but I don't know. I don't know the true answer, right? So I will sell one of my contracts there. And then we'll see how the rest of it goes, right? But I do like that we've now traded below. We came up. What is this type of retracement here too? So this was a over 79% retracement, but look at the bodies though. That was pretty much exactly a 79% retracement, and then displacement 1, 2, 3 drives higher, and then displacement lower. So we want to see it respect this 1 minute fair value gap. I don't want to see it continue much higher. That's kind of annoying if it does, but so be it. All right, so it's reaching back up into that sell side imbalance there. The midpoint of the previous sell side imbalance on the 1 minute chart as well. So it's in the middle of that right this moment. You can let it hang out around here. Our range is still there. Technically, this whole range here is fair game. But let's see. We didn't want to see something like that. For sure, I did not enjoy seeing something like that. So if we see further evidence of really big movement to the upside, then we'll collapse this trade. Like if we see this end up going above that bearish order block with a big green candle, then we will collapse the trade. Nothing more to be done on that. And nothing more really can be done on that. I mean, this is our thesis, right? We have our stops in play. We know where our 3 PD arrays are. If broken, then we know we need to collapse our trade. 1 minute chart. Sell side imbalance is already balanced. Midpoint. It's taken. 15-second SIBI. Right, so that sell side imbalance taken there, good. Immediate rebalance off of that top sell side imbalance here, and we want to see this pass below this segment here. Otherwise, it could just continue. Now, I like this as a failed attempt to head higher, and if I get what I want, I would get an immediate. I would like to see us break below this 1 minute sell side imbalance that we see here, right? Now, I'm pointing out lower time frame segments there because I do think that there's a chance that we end up heading down to 10 points to 18,405, and then TBD what will happen there, right? I'm going to take one profit when we get there, though, and go from there. So I want to see big black candles here, right? Want to see big black candles here. I don't want to see little jumps back up into that space. I want to see, there's 10. You can kind of see some of my positions that I have on. So I like that movement there. That's become a balanced price range as well. So now I have this sell side imbalance we could trade back up into. Man, I really don't like that. Let me see if there's other imbalances up there that I missed. Technically, there's a volume imbalance on the 15-second chart that was created roughly here. Okay, so sell side imbalance there. We broke below short-term low. We haven't broken back above that short-term high yet, so that's a good thing. Oops. Had an alarm set, so we don't want to see this maintain above and close above this here, because then it's got the possibility to shoot all the way back up here. You can kind of see this consolidation here, right? Headed back up, consolidation, consolidation. And we need to see a large movement back down. So as a reminder, technically this is the overarching swing on the 1 hour chart. And then on the 4 hour chart, there's even a larger swing that we're looking at over here, from here to here. We have nowhere near those midpoints, right? Midpoint here is new week opening gap. But on the 15-minute, we need to consider that this is a swing that has occurred, right? This swing low to swing high has occurred. So we need to consider this and consider that we're close to 18,400 midpoint. Now, 1875 is a better one there that I would prefer, but we'll see if the 7 o'clock run begins our continuation there. Drop back down here. Keep this on the minute chart, actually. So far, nothing but consolidation. Continue to see consolidation here. Add one more if it heads back up into that sell side imbalance. Okay. All right, so we're seeing bursts up higher, back up into that 15-second sell side imbalance. You see here, if we begin to, we saw higher lows here, but lower highs. So we see this constriction occurring here. Boom, 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 boom. So I do like that. I think that on the 15-minute chart, you can clearly see that so far it's been respecting the midpoint of that consequent encroachment there. So that's what I'm really keeping my eye out for, is that midpoint of that consequent encroachment on the 15-minute chart. That is 18421.75. Right there. 5-minute chart also constricting here, so I see this as a first stage of distribution. Okay. So this can continue to accumulate here. In fact, it could go all the way back up to take out these relative equal highs here. So look at that high, 18,420. Look at that high, 18,420 exactly. So if it takes out those highs once more, but doesn't take out this high, I would, and look at how exact, look at how my box isn't exact here. This is exact. Look at how exact that lines up, right? Pretty nuts there. Technically, this should go up there. So this is already balanced all the way up to that higher CPI there. So I'm going to get rid of this CPI here because we're referring to this one a little bit more. We breached a little bit below that sell side imbalance on the 1-minute chart. Remember, we have this overarching 1-minute sell side imbalance here, right? So we're breaching below that now. So we see that. We see that as well. Good. First area of profit should be taken. I will also take profits, first profit as well at that same level. So we see that we've gotten down there once we see a movement lower. We should be able to aim for that sell side there and beyond as well. So now I should be okay to move my stop down to, let's see, stops should be okay to be moved down to this here. Oops. It can come all the way back up to these relative equal highs here. Very possible. But I do think that it's going to continue lower for the time being. So we have, oh, that's not great. So it might come back up to these relative equal highs up here. And look at that push there. All right, so that is a buy side imbalance here. So if it starts to really rush back upwards, we are potentially still in trouble. But we'll see. Still within this consolidation accumulation range though. So kind of still within this range. It's fine. That probably got some late shorts stopped out there. Note that we stopped below the consequent encroachment here. I like that they're still respecting the consequent encroachment for now of this 1-minute sell side imbalance, and of course the consequent encroachment up here as well. heck is going on here? Let's see if I can fix that stop. There we go. Okay, so we should see a swift run below down to this level, and then we can shift our, I'll take away 2 contracts at that level because I think that we have room to go further south, as you can kind of see there. So once we take our first profits here at these relative equal lows, we move the rest of our, keep in mind 18,413. So roughly we want to move our stops to in profit at that time after we've taken off roughly half of our position. Technically I should do one more there. So take off the majority of our position at that time. As we see us continuing further below into this buy-side imbalance, which is left imbalanced, and towards this fair value gap within the new week opening gap, followed by this area of second or third stage accumulation on the way back up. Okay, so we should see price head down to take out these relative equal lows here on the 15-second chart. Looks like this on the 1-minute chart as well. Relative equal lows could serve you as well in that same area. So we should see that take this out shortly. We should see some big black candles come into play. This happens to be a 30-point take profit level. That's what I always set my initial take profits at. Do I think that there's more? Yes, I do. I definitely do. I like a movement back down to new week opening gap, actually. I think that would be a valid take profit, but 18,385 I think is reasonable as well. And then 75 as well for one more. So I like those areas as take profit. So half of my position will be off at this level, and then one more at 85. Once this adjusts, I'll update this because I want to have one final one at 75. And actually, I want to lower. I'll leave this one here because then I'll take one at 185 and one at 175 if it allows us to head down there. So I want this to take out this sell side liquidity right now, resting relative equal lows liquidity pool. We should see a big, nice drop now that we've closed below that sell side imbalance. I'd like to keep us below there. This is doing a good job. It could go back up into that imbalance again, and that's fine. We expect our entry was quite aggressive at that first volume imbalance here. Actually, I don't know why this one entered here. Some of my, it's because I averaged down, and maybe, I don't know. I should have entered at this volume imbalance, so I don't know why this is down here. Looks like my entry was a little bit off. Maybe I entered a little bit lower. Oh, that's because I entered one more at the bottom here. So should see some nice big black candles soon. And so we've reached, you know, roughly a quarter along the way to our goal here. We're seeing price continue to stay weak. We know that there's a draw of liquidity back to our new week opening gap. I like 18,360, 18,345 today. So we should see price draw down there now, or maybe go back up one more run up to there and then head lower. That's what the 1 minute chart looks like here. So you can kind of clearly see that 1 minute sell side imbalance. Had you entered at the high of that, you would have gotten a really nice entry, 420, and that would have been about 10 points, and you would have been done. You can trade that with size eventually, and that's a really, really good trade. 10 handles is solid. So here we go. Almost there. We should see us drop below there soon. And once it drops below that, this can be treated like a mitigation block essentially. So we want to see it drop below this segment. So now we can move our stop losses in profit, and I'm moving them to just above this here. And technically I should be moving them right below this CPI because that's where my true stop loss is. The stop loss moves up a little bit when you take profit here. So great. So now we have a target there, and then one more target at 75. The reason why I say that is that we have this 61% retracement. So 75, 76, I think that's a reasonable target there. I have the same on my other chart. Same targets here, just one further down below, where I'm going to take the majority off at 85 instead, or get stopped out, right? So that's the goal here. Either get stopped out or make it through. Now, it can just pump back up here and take everything out and head up higher. I don't think that's going to happen. I like, technically I could even keep this low here of 18,416 to be the true target for us to head back up to this bearish order block here, right? So as we can kind of see, we're seeing second stage distribution. So first stage distribution here, even on the 15-minute, technically you can see even more. First stage, you can consider this to be a first stage. I don't think so. It's just a return back to the original consolidation up here. I see this as first stage distribution. Second stage distribution, I like us to head down to see a little bit more. That's why I like most of my position off at 18,385, right? I'm going to move my stop loss. I'll keep it there for the time being. When we take this out, which we will in a moment, when we take 18,385 out, I'm going to end up moving my stop loss to this 18,411 there, because it's still above this mitigation block. Price can still come back up here, but imagine all the folks that tried to go long here. We had a quick movement lower, where our overall higher time frame bias is bearish for the time being, at least drawn down to the new week opening gap on a Friday. So we anticipate that price will continue lower here, right? So you should see the majority of those profits taken soon. There, once it hits 18,385, we can move our stop losses actually down to there now without fear of price going down to 14.11. All right, so price is going back up to a 1 minute volume imbalance right there. So we are at this volume imbalance here on the 1 minute chart. And there's another one further up as well. This is why we take profits at key levels and why we also don't choke our stop losses up that quickly, right? So this is what that looks like there. We should see a nice quick movement. Good reaction off of that. So there you go. Now our stop loss can be moved to here. And our last contract can be moved here. And we're moving, remember, we're keeping this in mind that 18,376 is prone to be a 60% retracement. And that is it for that first one. And we have one final move back down there. We're now moving our stop loss to the midpoint here. And we're going to assume that we will head down to at least 55 marker there. If I see, I'm okay with this being stopped out in profit here. I won't let it go further than 890, right at the low of that bearish order block. I think it could head up back to there. So I'm going to keep it in the middle for the time being. So we see that we're in this second stage of distribution here. Remember, this is a key level on the 15-minute time frame. This happens to be a 60% retracement level, 61% retracement level. So it's possible that everything stops there, right? This was one of our sell side liquidities, and we see we've touched upon that now. So we're going to watch this quite closely, make sure that if this continues to show us, now that's good. We like to see that displacement, and we should see a really nice rush towards new week opening gap now, which is this black line here. This being the third stage on the lower time frames, I think is important. On the 5-minute chart, you kind of see that same distribution there. And if we see us begin to move back above this high, that means we're in a bullish breaker type scene. So far, it's respected this bearish order block on the 15-second chart. So this bearish order block still respected here. I don't know if that shows up on the 1-minute chart. That's its own bearish order block there for the time being. Yep. So let's assume that this bearish order block remains. We'd like to see it remain, rather. That's what it looks like on the 1-minute chart, right? If it blows above this and heads up to here, that's a possibility, but we don't want to let price head up that high, right? We, in fact, could choke this to the midpoint. So managing this, we can see the midpoint of this bearish order block here. We can see the midpoint of from this low to this high, the midpoint's here, right? So we can actually move our stop loss to the midpoint of that bearish order block because we see that we spiked above it. Sorry, not the, yeah, we spiked above it. I'm actually at the 75% mark, but we spiked up above the midpoint here. So if we start to really rally here, then it's going to come back up, take out this area of liquidity, and stop us out. If it doesn't, then it's going to go run for new week opening gap, but it might come up to take out this area of liquidity first, right? Very possible. And that's okay. That would have allowed us to have a good solid 40 handle move, more than our 30 handle expectation. All right, so that's it. We got stopped out, and there's a good example of morning trade. I'll post this in a little bit, but wanted to walk you through what examples look like when you're trading a market maker sell model that looks nice, right? And you know that there is a draw. It doesn't have to get down to here, but remember, we had marked out that this was a optimal trade entry for long, so it very well could be a profit taking for those that started to go short here. Do I think it's going to head lower? I mean, look at that. It came down into this sell side imbalance and almost immediately sold off there. So it's going to head back down to that. In fact, let me see if I can take one more scalp on a third move here. I'm going to try and scalp this once more if we can get up to, and I don't think we're going to get there, but if we can get up to that bearish order block, I was hoping we would get there, but we aren't. There's a low chance here now. Maybe not. I would like to get one more push above here to get into this. This is the one I care about, this sell side imbalance on the 15-second. I like this one better. I like this one as a re-entry back short because it is coupled with this bearish order block on the 1 minute and the 15-second. So I'm going to try once more. On a different account now. And what we're doing is we're assuming that this price is allowing us to have a low, high, lower, low, displacement higher. And we're assuming that we can have a bit more lower to go, but that we're pairing this with a bearish order block. Stop loss will be above this bearish order block here at about 10 points loss. If it loses, fine. Totally within my parameters of expectation there. But I'm hoping and expecting us to trade up to that sell side imbalance now. And head further down to tackle this new week opening gap once more. So let's see. Should see a nice little run up there. And this might be, over trading here, but hopefully this gives me the opportunity here. Don't go away without me, no. And that could very well be all that we need, that it's headed down into this buy side imbalance and is done, right? Like it could be done here. I don't think so, but it could certainly be done there for sure. But we will see. We will watch this closely, and we will give it the ability to head up to the low of this candle because there's a volume imbalance there, sell side imbalance combined with a premium buy side imbalance. So I'm going to treat this here as a inversion fair value gap. Okay, so I want to treat this as an inversion fair value gap. Stop loss is going to be right above that because if we go much higher than that, it's likely going to stop out. Okay, so where are my targets now? Well, we have that as a target. We have this as a target. And then let's see. Midpoint of the new week opening gap can also be a target. But we need to see if this is going to respect this inversion fair value gap here. Okay. And I'm going to be very, very tight with this management here, because I don't want to see it head like much higher than this. But I do want to see it respect this bearish order block, as well as this volume imbalance and this bearish inversion fair value gap. So so technically I will leave my stop where it should be, which is above that short-term high, just for example purposes here. Okay. All right, so we see some movement down below. It might come back up here now. We have 7 o'clock movements, 7 o'clock a.m. So we've got a little bit of movement here. Might come back up a little bit first. But I like this as a 3 drives pattern and a failure. I want to see this fail deeply and head down to a new week opening gap now, which is my core initial idea. But we're cognizant that if it fails above these areas here, then it's probably going to fail, because we still have this one that would be the high of this bearish order block here, and that would mean that we're not respecting the midpoint of that bearish order block, which happens to be what? Midpoint of this bearish order block now happens to be here, right? Consequent encroachment, or sorry, mean threshold of that is roughly here, right? So we see a movement up into the sell side imbalance, bearish order block here. If we don't respect this this here, then our stop loss is above that bearish order block and that high here. So we're looking at and expecting price to consolidate here, come up for some orders here. If we are bearish or continue to be bearish, then we'll see this bearish order block support our price, and if not, then so be it. We'll get stopped out. We traded to the top of that sell side imbalance so far, and we're trading potentially up to that inversion fair value gap that I had mentioned earlier. We'll see if this bearish order block, so there's also this bearish order block, right? There's no wick here, so there's nothing I can take as a initial level there. But I am wary that this segment here is price left to be traded to the upside. I don't want to see it go above this volume imbalance. There's been price traded through one time, one pass through, where it closed through this volume imbalance here. I don't want to see it pass through that again. So if it closes above that volume imbalance, that would be a potential indication that things are not going my way. It's time to collapse the trade. Okay. It's already gone through a PD array here, second PD array. This is the third PD array. So this will be my last line of defense, is that sell side imbalance, inversion fair value gap, essentially. And then I'll manually collapse the trade if that happens. If it closes above here, okay, so it didn't close above it, but let's see if the 1 minute closes above that consequent encroachment level. If it can respect that level, then I can keep this trade on, but if it doesn't respect that level, then we're done. Okay, so far respected that consequent encroachment there, and has respected the inversion fair value gap that we marked out here. We'll see if it continues to rise. It does look like it's rising here, so I'm really, really close to closing this out. All right, so 1 minute is rising above that consequent encroachment. So it might be retracing to a higher target now. If we see it close, it might be retracing for this sell side imbalance here, and that would be a little bit too much risk for me to take on. I'll let it stop out there if it does, but just for training purposes, that I want to show you that there are losses here. There's nothing that is without losses. Oops. That's not what I wanted. Okay, so we like to see that type of movement. We want to see if it's going to sustain now. It could have just been going down to pick up some more orders here. But that type of movement, we so far have still respected the midpoint of that mean threshold of that bearish order block on the 1 minute time frame. That's where that dotted line is. So, I mean, we'll see if we start to see displacement lower, then we can feel comfortable with that. But if not, we are going to close this trade out at the volume imbalance here. We need to see displacement lower, though. We need to see that our bias continues even below these levels. So I like how it's respected the inversion fair value gap there on the lower time frame. I'm going to move my stop just above that inversion fair value gap now, because if it breaks that, it's pretty much going up. There's no need for me to wait for this volume imbalance up here anymore. It's traded up to it. It's traded down from it. And we're back down to our original entry, which is at the low of this sell side imbalance. So we see this displacement on the 1 minute time frame. We see that we've traded to this volume imbalance here. We rebalance that, and now there's a couple of other volume imbalances here on the lower time frame that we need to price could trade up back up to, right? Could trade even back up to this one up here. We traded to it once, but haven't balanced that fully out yet. And we have this sell side imbalance here. So trading back up to that sell side imbalance. And we did break below this short-term low, this short-term low, and this short-term low as well. So I think we're going to be revisiting our outstanding, and I'll take profit off there if I can get down there. So we can see prices not prices following what we're expecting here, right? So we see we've moved displaced lower here as well. First profit technically should be right here. So what I'm gonna do is I'll monitor this. We have a little sell side imbalance here that price traded to. But it does still seem that price is holding here for the time being. We go down to a lower chart. So we want to see it respect this sell side imbalance at this point in time. We've now traded down through it, back up through this sell side imbalance, and we've traded back down and we want to see this, consider this to be an immediate rebalance to this, to the sell side. Okay. This is tape reading here. This is live price action tape reading. It's a really fantastic lesson here. I like that imbalance here. I want to see that stay open. And in fact, I'm going to take my first profits here, if it'll let me. And then I'm going to move my stops in profit to take care of commissions. I want to treat this as a breakaway gap, and I don't want to see it head up here anymore. So now I have profits taken. I can take more profits off here. Actually, let's take one each time. Let's take it at various profit taking targets. So one here. We have one here at the rejection block. One here at this short-term low. And you can kind of see these as well. Technically, I can, I might get stopped out on this, by the way, but that's why we take profits. So one here, right? Short-term low. One here at this short-term low. And then beyond that is really our new week opening gap, right? So let's see if we get stopped out here. We might. Oh, we got stopped out. Okay, so no harm, no foul. Got stopped out. Still profit is profit, so happy with that trade. It was a riskier trade because we were below 50% mark, but I could see this return. I could frame this out, right? When we knew that there's a possibility that price could take this short-term low target out and then begin much march higher. Do I think it's going to continue marching higher? Maybe. But we've already captured a nice amount. What was today's profit? Oh, whoops. 427.30 plus 78.80 plus 163.90. This is a good solid 670 profit. So I'm going to go live, but I will use this as a training exercise in terms of live execution, price action, and what I was looking for and why. And then you can take this and study this as you need to. Okay. All right. So hope that was helpful. If you like this and you like this style, I'll try to, give it a like, drop some comments in here. And yeah, that's just price action. That's finding your model. It's one of the models that I use, market maker sell model. And yeah, hopefully that was helpful and insightful. And until next time, we'll talk soon. See ya.